All right, so we just did our first depreciation for the truck, okay? And let's see what is next. It tells us here that we are going to depreciate for 1 month of depreciation for both coffee brewers, okay? The first coffee brewer has a life remaining of 3 years, no salvage value, okay? And the second brewer that we bought, okay, has a useful life of 5 years, no salvage value. Use straight line. So in this case, I'm very specific on which method you're going to be using for the coffee brewers. So let's go ahead and locate where my coffee brewers are on my list here. So here's my coffee brewer. So I have two separate tables, one for the first coffee brewer and one for the second coffee brewer. Okay, at least we know this much. There is no salvage value for any of them. Okay, and we know this much as well, that my second coffee brewer has a useful life of 5 years, while my first coffee brewer only has a useful life of 3 years. Okay, so let's go ahead and determine the asset cost as well as the date that we placed into service. So in this case, right, let's go to my ledger to determine what my values are. So in this case, I'm going to scroll up, okay? Here, my coffee brewers, my first coffee brewer, we have here that we purchased on May 31st, okay, is going to be for $1,900, okay? In this case, when you buy the coffee brewer, the first thing you're going to do is check to make sure it works, all right? So by doing so, you already placed it in service by testing it out, plugging it into the wall, and setting it up so you can use it. You also need to use it to prepare your menu, right? You can't expect on the day that you open that you don't know how to make your coffee right, but depending on the recipe, right? You don't want to do that on the very first date. So in this case, when you purchase the asset, right, that's the assumption that you are going to start using it right away, because you need to prep it. You need to make sure what your measurements are. How are you going to brew your coffee? Are you going to brew it, medium? Are you going to do a dark roast? Well, how are you going to brew your coffee? Okay, so in this case, the assumption here is that the day that you purchase it will be the day that you are going to depreciate it. So in this case, I bought it on May 31st. I recorded it June 4th. So in this case, you can either treat it as May 31st or June 4th, whichever date you want to put here. And that was for the first coffee brewer. Okay, 1900, date that you placed into service. I'm just going to put June 4th. Okay, and 1900. Now, that's my very first coffee brewer. What about my second coffee brewer? Let's take a look at how much it is right now. So in this case, when I purchased it for $2,266 plus the tax and the shipping. Okay, so I have a total of $2,627.95. However, I also paid it on time and received a discount. So in this case, my total amount for my second coffee brewer is something I need to calculate, because I originally purchased it for $2,627, but I got a $22 discount. So in this case, my asset for the second coffee brewer is $2,605.29. Okay, if you add these two numbers together, you'll plus the 1900, you should get your grand total of the 4505.29. So in that case, right, this is the total amount of coffee brewers that you have. So in this case, that's exactly what you have here. 2605.29 is your second coffee brewer. 2605.29. 20, 60529. All right. So now we have everything that we need to have for our coffee brewers. So we're using straight line and we're depreciating it for the month of June. So what is going to be my depreciation basis for my coffee brewer number 1? What's my formula for depreciation basis for my coffee brewer number 1 using straight line? 1900, okay? Because in this case, your formula here is your asset cost minus your salvage value, which is 0, gives you 1900 as your depreciation basis. Right? What's my rate going to be? Good, right? It's 1 over the estimated useful life, which should give you 0.033333333. So then what's my depreciation expense going to be for the month of June?
I got 633.33.
633.33. Now, if I depreciate this for the month of June, for the month of July, and the month of August, wouldn't I get to 0 at that point? So is this the correct number to use? That's a third of the asset. Is that something I can assume that I'm going to depreciate a third of my fixed asset for the month of June? I just purchased it the month of June. How is it possible that I depreciate it for a third of the price?
Do you divide that
By
12?
correct, because this is the total amount to depreciate in 1 year. Okay? A third of the price is for the whole year. Okay? So in this case, this $633 is not possible because I can't do that. I'm only depreciating for 1 month. So therefore, I need to divide this by 12 to get me the total amount to depreciate for the month of June. So in this case, how much should that be?
52.78.
52.78. Okay. Now in this case, it is optional if you want to choose to practice this, okay, to solve for your book value. Again, we're only depreciating for 1 month, so there's really no true point to do this, but again, this is practice purposes only. Okay, so in this case, now my asset should be worth 1847.22. Okay, so that's only for my first coffee brewer. I need to solve for my second coffee brewer. So in this case, for the month of June, what should be my depreciation expense for my second coffee brewer? Or in this case, depreciation basis first and then expense after. Okay, what's my depreciation basis for my second coffee brewer?
2605.29.
Good, right? Your asset cost minus salvage value, which is 0. So that should give you the 2605.29. What's my depreciation rate going to be?
0.2.
0.2, which is 1 divided by 5, should give you 20%. Okay, so in this case, what's going to be my depreciation expense for the month of June? So same thing here, you're going to multiply these two together to get the year, and then divide it by 12 to get you the total depreciation expense for the month. So in this case, good, right? And your book value should be 2,561. Okay. So now that I have my depreciation expense for both of my coffee brewers, what I'm going to do here is I'm going to add them up together. Okay? So then I can get a total for both of my coffee brewers. So I'm going to add the 52 plus the 43, okay, to get a total of $96.20. Okay? $96.20. So therefore, let me go ahead. I can either journalize that now or I can choose to do it later. I'll just go at least put in the accumulated depreciation. Okay, to be 96.20. Okay. Account number, you can do that later. You don't have to do it now, but if you choose to do it now, let's see. The accumulated depreciation for the coffee brewers is 15,010. Okay. So let's see what's next. Next, okay, we have calculate 1 month of depreciation for the coffee grinder, 5 years straight line, no residual value. Okay. So in this case, same ordeal over here, except the only difference is we only have one coffee grinder. Okay. We already know it's going to be straight line, so SL for short. Okay. We know that there's no salvage value or residual value, and we know its useful life is 5 years because that's what it says. Okay. So let's go ahead and figure out how much it cost us and when we placed it into service. Okay. So go to your ledger. We're going to drop down, and here it is, the coffee grinder. How much is my coffee grinder right now? How much is my coffee grinder right now?
41.58 and 7 cents.
Okay. 41.58 for not 41.58 because that was before. Don't forget the discount. I discounted my item. So how much is it now?
41.45
41, 45, 57. So asset cost 41, 45, 57. Okay. Now here's the important thing. When did I place into service? When did I place this into service?
June 15?
June 15, because that's when I got the foundation ready. That's when I got the electrical work. So it's ready to be placed into service. So in this case, June 15. Now, if June 15, what does that tell me? Do I depreciate this month or no? Do I depreciate for the month of June? Yes or no?
Yes.
Yes, because it fell on the very last day. Okay? So in this case, yes, we need to calculate the amount, the depreciation for the month of June. Okay? So in this case, right, depreciation basis is going to be asset cost minus salvage value. So it's your asset cost. Okay. What's my rate going to be?
0.2.
Good. Right? And what's my depreciation expense for the month of June?
$69.09.
6909. Okay. Will equal 4047. Okay. So 6909 for the accumulated depreciation for the coffee grinder. Okay. Okay. Which should be account number 1521 for 6909. Okay. Let's see what the next one is. Now it says here that we depreciated the coffee grinder. We're going to depreciate 1 month of the computer, the printer, and the cash register. 5 years, double declining, no residual value. Okay, so 5 years life, no residual value, and double declining for the computer, printer, and the cash register. Okay. So let's start locating the table first for the computer. So it's the very first one. Okay. We know that the useful life is 5 years. Okay, so the computer, the printer, and the cash register all have 5 years. Okay. And no residual value, so that means it's 0. And our depreciation method is going to be double declining. DD for short. Okay? So let's first start off with a computer. what is our computer worth right now? So let's figure out in our ledger. Okay. Here you go. Computer. How much is my computer right now?
$1834.84.
1834.84. Okay. All right. So if we're going to depreciate for the month of June, okay, what's my depreciation basis going to be? For double declining.
The cost of the asset.
Cost of the asset. Okay, in other terms, that would be incorrect. However, for the very first one, right, that will be an exception. Okay. How do we calculate what the depreciation basis is?
The beginning of the yearbook value.
The beginning of the yearbook value. So in this case, because we're starting to depreciate, yes, technically this would be the asset cost. However, it is the beginning of the yearbook value. Okay? So in this case, it is 1834.84. What's my rate going to be?
%.
40%. How did you figure that number out?
That's double 20.
Good, right? It's 1 divided by 5 times 2. So in this case, it's 40%. All right? So in this case, what's going to be my depreciation expense for the month of June?
$61.16.
6116, good. Okay, which is going to give you okay, that much for your next book value. Okay? So I'm going to hold off and we'll just do all three of them together. So 6116 for the computer. All right, next one we have is the printer, right? We know it's 5 years, 0 salvage value. Okay. And how much is my printer?
$378.87.
378.87. All right, so I skipped a little one component here. When did I place the printer into service? Okay. In this case, when did I buy it? When did I buy my printer?
June 5th.
June 5th, right? And what do you do when you have your printer? You just plug it into the wall, set it up, do some test runs, and it's ready for service. So in this case, the day that you bought it will be the day that you place into service because you have to do some maintenance, you have to set it up, put all the ink in there, etc., etc. So in this case, the day that you bought it should have been the day that you had it ready for service. All you had to do is plug it into the wall. Right? Straightforward. So same thing with the computer, right? You need to plug it into the wall, set up what you need to set up your QuickBooks, whatever it is, right? So in this case, it's also the day that you bought it. Okay? So in this case, it is $378.87. Okay. So what's my depreciation basis going to be for the month of June? Good. Right? This is going to be 1 divided by 5 times 2. Right? Because it's 1 over the estimated useful life times 2 because it's double declining. So you get that 40%. So what is going to be my total depreciation expense for the month of June?
$13.
$12.63. Okay. Good. All right. So let's go ahead and do the last one. Solve for your register, right? We already know it's going to give us 5 years, 0 salvage value, okay? Double declining, okay? So let's see what our asset cost is. Okay. So right now my cash register is at $6.49 and 49 cents. $6.49.49. Okay. Now, when did I place this into service?
June the 6th.
June 6th, right? Same ordeal, right? We bought it. All you got to do is plug it into the wall and test print it. Make sure you set it up how you want to set it up. Okay? And the assumption is you should have put, or it should have been ready for service on June 6th. So in this case, same thing here, right? How are we going to calculate this for the month of June, right? We're going to start off with our depreciation basis being the beginning of the year's book value at $649.49. Rate is 1 divided by 5 times 2, which is 40%. So therefore, what's going to be my total depreciation expense for the month of June? $21.64. You probably have a couple cents.
Yeah.
Okay. Right. So 21.65 is what I got. Right. Now you can choose to plug in your numbers now, or you can wait till the very end to do that. It's up to you. I think we should just wait till the end. Let's continue to see what else depreciations we need to do here. Okay, so we just did the computer, printer, and cash register. Next we have here is to calculate 1 month depreciation of furniture. Okay, so that means the desk, the counter, the set, the tables, all of it. All right, so 7 years, straight line, no residual value. So that means all my furniture items are going to be straight line, 7 years, and no residual value. Okay. So let's go ahead and see what my first furniture item is going to be. So in this case, after the printer, we have the coffee brewer, coffee grinder, we've already done. First one we have is the table, okay? And we're doing straight line, okay? SL for short, okay? We have 7 years life, no residual value. So in this case, let's go ahead and look at how much my table is worth right now. Okay, so here's my bistro tables and chairs. How much is my tables worth right now?
It's an expensive table.
Yeah, but we got 10 sets of them, so.
$66.05 and 8 cents.
660508. Okay. And when did you actually place this into service?
June the 8th.
June 8th, right? In this case, when you buy the table, it's already ready. You just have to put it in your shop, right? It already starts serving as soon as it arrives your location, right? There's nothing that you need to do to place it to service, right? It's a table. So in this case, we're going to do the month of June. Okay. My depreciation basis for straight line is going to be your asset cost minus salvage, which we know since salvage value is 0, it's going to be 660508. What's my depreciation rate going to be?
20%.
Not 20%. We have a different number this time. It's 7 years now, right? Point 0.142857. Good. Okay. So, what is going to be my depreciation expense for the month of June for my tables?
I got 78.63.
7863. Good. Okay. Next, we have here is going to be my counter. Okay, we know it's going to be 7 years, no residual value. Okay, and we know that's straight line. Okay, so let's find out what my asset cost is and when I place into service. Okay, so next one is my counter. I bought it on June 7 for a total of $11.93 and 22 cents. $11.93.22, and I bought it on June 7. Okay. So in this case, June depreciation basis is going to be my asset cost minus salvage, which salvage is 0. So therefore, 1193.22 is going to be my depreciation basis. Okay. What is my rate going to be? It's going to be 1 over the estimated useful life because it's straight line only one time, which is going to give you that same number, the 142857. So what's going to be my depreciation expense for the month of June for my counter?
1421.
Good. Okay. Next we have is our desk set. Okay, same thing. 7 years, 0 residual. Okay. This is straight line. Okay, so let's see what my asset cost is for my desk set. Okay. All right, desk set says that I bought it on June 7 for $658.37. 65837. 65837. 65837, and I bought it June 7. Okay. Right. Again, we're going to depreciate it for the month of June. Right. Depreciation basis, once again, same things. Your asset cost minus salvage value. Salvage value is 0, so therefore your asset cost is $658.37. This is going to be 1 over 7 years. Okay, just get the same thing, 142857. So in this case, what is the total depreciation expense for the month of June for my desk set?
$784.
$7.84. Good. Okay. Last on here is my display shelves. Again, we had 7 years. Estimated salvage value is 0. Okay, this is straight line. Okay, so my asset cost is for my display shelves is I bought it on June 7. Again, display shelves, you just set it up, not a big deal, and it's ready for service already for $577.08. 577.08. Okay. All right, so we're going to depreciate it for the month of June. So in this case, right, depreciation basis is going to be the asset cost minus salvage value. Okay. This is going to be 1 over the estimated useful life of 7 years, which gives you the 1428.57. So in this case, what is going to be my total depreciation expense for my display shelves?
$6.87.
$6.87. Excellent. Okay. All right. Last but not least, right? Let's do this last one right here where we need to calculate 1 month's worth of amortization expense for the goodwill, which you have a 15-year lifespan. Okay? So, amortization. What do we know about amortization?
It's used for land.
Not land. That's depletion. Intangible assets. So in this case, that's what amortization does. Now in this case, the rule for amortization, how do we calculate amortization?
Like the straight line?
It's
method?
exactly like straight line. Excellent. But the only difference is there's no salvage cost because it shouldn't have a value at the end of its life. It should just be completely gone. So in this case, useful life is 15 years. No salvage value because it doesn't exist. However, how much is my asset cost? So let's go ahead and determine how much the value of goodwill is. Okay? Let's see what goodwill is. Okay, goodwill. I bought it on May 31st, okay, when I purchased the business. All right. And it's worth $2,100. Okay. So 2,100. Oops, 2,100. And I bought it on May 31st. Okay. So in this case, right, it doesn't really matter when, especially when you have your amortization, right? Especially when you find out that you have goodwill, you depreciate it as soon as possible. So in this case, I'm going to depreciate for the month of June anyway because I bought it May 31st. Okay? So in this case, right, if I'm going to depreciate it for the month of June, if this is very similar to straight line, right? Straight line, the depreciation basis is going to be your asset cost minus salvage value. In this case, I don't have a salvage value, so your asset cost is going to be your depreciation basis. What about my depreciation rate?
0.066666.
Good, right? It's going to be 1 over the estimated useful life of 15, right? Which should get you 0.06666666, right? All right. So in this case, I need to now calculate what the amortization for the month of June is going to be. Okay.
$11.67.
1167. Okay. Excellent. Okay. So now I'm just gonna go ahead and backtrack since I didn't fill in my journal. So I'm gonna go through each and every single one and go through the journal as well. Okay. So far we did the accumulated depreciation for the truck, the brewer, and the coffee grinder. Okay. So one at a time, we got the accumulated depreciation for the computer. Okay. We have the accumulated depreciation for the printer. Okay. We have the accumulated depreciation for the register. Okay. We have the accumulated depreciation for all the furniture, so starting with the table. Okay. And then we have the accumulated depreciation for the counter. We have the accumulated depreciation for the desk. And then the last one we have here is the accumulated depreciation for the shelves. Okay. Okay. So let's go look at all those account numbers real quick. So let's see, accumulated depreciation for the computer is $14.11. Printer is $14.21. And then the register is $14.51. Okay. And then all the tables, desks, and stuff like that is $13.11, $13.21, $13.31, $13.41. Okay. So let's go ahead and go through all our depreciation tables to determine what our values are. So for the computer, how much is my accumulated depreciation? My depreciation expense. For my computer.
$61.16.
$61.16. Okay. What about for my printer? How much is for my printer right now?
$12.63.
$12.63. What about my register?
$21.65.
$21.65. Okay. Next one is my tables. How much was my tables for depreciation expense?
$78.63.
$78.63. Okay. My counter.
$14.21.
$14.21. My desk. Oops. How much for my desk?
$7.84.
$7.84. Okay. And last but not least, how much for my shelves?
$6.87.
$6.87. $6.87. So in this case, right, all I gotta do here is just do my equal sum formula for my depreciation expense to tally up all of these total depreciations here. So in this case, I'll do the math for you. I should get a total of $625.95 for depreciation. Okay. Right? And let's check out my account number for my depreciation expense account, which is going to be depreciation is for $66,000. So $66,000 for depreciation expense for $625.95. Okay? You can make a note here. Depreciation for the month of June. Okay. And of course, since we're already here and we already have our tables out, we should also do the amortization as well. So in this case, what account will I use to represent the amortization I calculated for my goodwill? Okay, what account would I use?
$66,500.
$66,500 for amortization expense. And then for my goodwill, what is, it's going to be amortization goodwill, which is 19,101. Okay, so I can go ahead and just do that since I'm already here. Amortization expense for $66,500, and then the accumulated, right, it's identical to the depreciation. The only difference is instead of using depreciation, you're going to use amortization. And then this one's for the goodwill, which was 19,101. Okay, and how much was the amortization for? What's my amortization expense?
$11.67.
$11.67. Okay. And I'm going to go ahead and say amortization for the month of June. Okay. So that means now that I finished using my depreciation tables here, I calculated all of my fixed assets, including my intangible assets. So I am done with my depreciation table for now. Okay, so that means let's plug in all our numbers into my ledger. And yes, okay. So starting with depreciation expense. So let's go towards that first. Let's do my expenses first. Okay. So here we are, depreciation expense. Okay. You can say here, depreciation for all fixed assets. Okay. We're on the 23rd for a total of $625.95. right? That's my grand total depreciation expense. Right? If you want to go ahead and do it, since we're already here, I'm going to go ahead and just also plug in my amortization here as well. Amortization for goodwill. For $11.67 since I'm already here. Okay. Good. So I have a depreciation expense and my amortization expense done. So now I'm going to go one by one to every single fixed asset, and I'm going to mark them all for the accumulated depreciation. Starting with the first one, we have our truck. Okay, so here we are. Accumulated depreciation for the truck, right? You could say adjustment, okay, for June, okay, and it's going to be a credit for $257.67. That's how much it is for the accumulated depreciation for my truck. Okay, $257.67. Okay. Next one is my coffee brewers. Okay. All right, here's my accumulated depreciation for coffee brewers. You can separate your coffee brewers here, saying this is the accumulation for my first one and then for my second one. It's up to you. So accumulated depreciation, brewer 1 was a total of $52. Was for $52.78, while my second one was 43.42, so 52.78. And then brewer number 2 was $43.42. Okay. So then you're going to have a credit of $96.20. Okay. Then you have the coffee grinder. Okay, accumulated depreciation for the grinder. Okay, adjustment for June. Okay. You have a total of $69.09. Okay. Let's see what's next. Next is your computer, printer, and register. Okay, so I'm going to scroll up for that. Okay, so here's your accumulated depreciation for your computer. Adjustment for June for a total of $61.16 credit. Okay. Your printer. So here's your accumulated depreciation for your printer. was for $12.63. Excuse me. You also need to do your accumulated depreciation for your register. Which is for $21.65. Okay. And let's see what's next. And then you got to do your table, counter, desk, and shelves. So furniture. Okay, so here's the first one. Your tables. So accumulated depreciation for your tables. Which is going to be $78.63. Okay. Your depreciation for the counter was for $14.21. Okay. Your desk set, so accumulated depreciation for your desk set was for $7.84. Okay. And then last but not least, we have the display shelves. For $6.87. Okay, so that's it for the depreciation. We still got to do one more, which is the accumulated amortization for goodwill. So all the way down at the bottom, accumulated depreciation, accumulated amortization for goodwill right here, accumulated amortization. For goodwill was $11.67. Okay. Go ahead and save your work here. We're going to stop here for today because it's already 4:20. So we're going to stop here. So when we come back, we're just going to go ahead and adjust our office supplies and everybody's money that they earned. Okay, so that shouldn't take too long. And then we're going to go ahead and dive into the adjusted trial balance. And hopefully, if we have enough time, we can go ahead and do the financial statements. That's going to be the easier part. This one's really easy because once we've done the adjusted trial balance, everything's just copy and paste. Okay? All right? So other than that, any questions?